Hi there. So we're in the third week of January and Nifty continues to be in consolidation. In absolute terms, it went down by 1.47% and closed at 21,571 on Friday. Now, primarily, it's the banking results, or for that matter, HDFC Bank, which brought down the Nifty significantly. And this week was primarily banking results. So we saw HDFC announce results, ICICI Bank, Kotak Mahindra Bank, and we are also bringing in Bank of Maharashtra over here. A few other banks also announced results, but these are the ones that we are covering. And then OFSS happens to be a software company which operates in the banking technology space. So we cover their results. Now the approach has been similar. If you have been following us, we tell about where Nifty closed, what's expected to a certain extent. Is the Nifty trading above the valuations, significantly above the valuations, or is it close to the valuations? So it maintains itself at 7 to 8% above its average valuations. So it's not very expensive at this point in time, also because the results are in tune, and if you compare it with 2022, then definitely market is undervalued. But compared with 2021, it's slightly, now moving in the zone wherein it is getting costlier than what it was in 2021 or what has been the average. Now, so let's cover these results, and there will be links to the bar. You can check them or continue the chat over there. We start with HDFC Bank being the first one. Now, in terms of the revenue, it went up by 25%. Profit was also up by 33%. Net interest income up by 24%. The net interest margin, which is almost the same for everybody, because the cost of capital has been increased because of the RBI regulation now. It has come down to 3.4% from 3.5%. So what it means is that the banks, at the price at which they are borrowing, is now increased, and they have to maintain more capital, and when they pass it on to the consumer, the margin in between that has reduced. That's what net interest margins mean, and this is common for all the banks, and to a certain extent, because the overall interest is rising, the loan book is becoming relatively difficult to maintain in terms of the targets. That's common for all banks for that matter. Branches added 146, deposits up by 27.7%, and gross NPA up slightly by 0.03% to close at 1.26%. Overall, from numbers perspective, not a very bad quarter, I would say. Although the market was expecting more profit and increase in the loan book size, and because of that, it took the beating. Now, the guidance from the management is that although there is difficulty in maintaining the loan growth, but they're confident that the retail and MSME segment will be able to drive the loan book further. The bank feels that they have adequate capital, and they do not foresee any immediate need of raising capital. So that is pretty much what HDFC Bank was. It is closed at 1480. At that price, if you look at from a valuation perspective, and even in terms of one is, of course, you can look at it from the historical perspective. So from historical perspective, it is definitely trading at a slight discount at this point in time. And if you compare it with the peers like ICICI Bank and Kotak Bank, then to a certain extent, given the way HDFC was in the overall pecking order of the banking industry, is also at a slight discount. If it continues with the kind of results that it's showing, then I think at least for now, I would see that this is a good opportunity to accumulate a little more. But any stock which goes into the undervalued zone might remain in the undervalued zone for a significantly long period. And every time HDFC Bank has touched 1650, 1700, it has not been able to break that barrier. And now again, this bloodbath has brought it to below 1500 levels. So it can remain at this range bound place for fairly long. So if you're investing, then you can be assured of overall preservation of the capital perspective, but you might have to be patient with it. So that's our view on HDFC Bank. The next one being the ICICI Bank. Now, from ICICI Bank perspective, net interest income rose by 13.4%, profit up by 23.5%, net interest margin for that matter in case of ICICI Bank up by 0.22%. So that's a positive, and that's why to a certain extent you are seeing that the market has responded positively, although the results came only yesterday during the weekend. But overall, there is positivity in the after the results have been announced. Deposits up by 18.7%, gross advances up by 18.5%, NPA down by 0.77% to 2.3%. So if we really look at it from a quarter perspective, ICICI Bank had an excellent quarter with, despite the cost of raising capital increasing, the net interest margin improved, as well as the gross NPA came down. So that was for ICICI Bank in terms of the guidance. One is, of course, everybody is talking about net interest margin and the effect of the higher cost of capital on the overall net interest margin. But that aside, what ICICI Bank has indicated that they do believe that there will be a growth, and that would be driven by digital infrastructure. And also because of the customer that they are able to acquire, transaction volumes, and overall fees income growth. They do believe that the loan book should improve in the upcoming quarters because of the robust retail and corporate demand, particularly in segments like infrastructure and renewable energy, which is a significant place of investment. So overall, very positive quarter for ICICI Bank. Guidance is also positive. Depending upon how the markets approach, you can definitely build a little bit position in this particular bank. They do believe that they have a strong capital, and the bank may consider further raising capital if needed. At this point in time, they're not planning to get it. So next we move to the Kotak Mahindra Bank. Kotak Mahindra Bank net interest up by 15.9%, profit also up by 7.6%. Net interest margin in this case also came down by 0.25%. So, but their overall net interest margin has been very good, 5.22. So it brought down by 0.25 is definitely a drag, but it's still, the overall margins are good. Total advances 19% year on year, provisions 35% year on year, and gross NPA down by 0.17% to be 1.73%. Guidance overall highlighted investments in digital initiatives. Now all the banks, most of the banking companies today want to push more of their transactions to their consumer base. That's why so much focus on digital initiatives. One of the reasons ICICI Bank is performing better, I believe, than HDFC is because of their technology. Now, I'm not an expert over there, but definitely as a consumer, I have felt a lot more comfortable using ICICI Bank. And the other thing which Kotak Mahindra Bank has indicated is the branch expansion to drive the growth. They do believe that if more capital is needed, then they will be able to get that. And in case there's some regulatory changes or some kind of external shocks, they will be able to raise the capital. So overall, a positive quarter for Kotak Mahindra Bank also. The next one that we pick up is Bank of Maharashtra. This is a mid-cap bank, PSU I think. Net interest income up by 25%, profit up by 34%, which is significant. Pre-provisioning operating profit 27%. Deposits up by 17.8%. Gross advances up by 21.7%. NPA is down, so again 0.25% to 0.22% only. So that's a very positive. And this bank has had an excellent run up from 34 to 51 in the last 2 quarters. And even in this last, when the results have been announced, they've been received so well, and the overall stock price has gone up. Now, the guidance from the bank is that they do plan to raise equity, rupees 500 to 750 crore in the current quarter to support their growth plans. and they did cut their home loan rate by 15% to be at 8.35% as part of its new year offer to customers. They do indicate that they will be expanding the branches in the coming quarter. So that was Bank of Maharashtra. The target loan growth is in the range of 12 to 15% for 23-24. So that was Bank of Maharashtra. Overall, if you look at banking as a space, I think one of the key things that is coming, cost of capital is increasing because the margins are coming under pressure. Every bank is thinking about deploying technology appropriately and generating more profits through that, and that's where the OFSS kind of companies come into play. And this company, which is in the software space, had an excellent set of numbers. Now we will provide all the links to the BARD. You can go and check the details of what this company does. Over here we are only bringing in the numbers, and then we'll be providing some directions on what the management has to say about these stupendous numbers that they have gotten, because of which stocks seen 25% to 30% jump in the last 1 week. Revenue up by 25.8%, profit up by 69.4%. So this is the place wherein most of the meat is. 69% up to be at 740.8 crore. And this is a dividend company, but because the profits are going up so well, and part of the profits come because of the deployments that they get, and part of it come from the services. So part of it is recurring. So operating income up by 45%, operating margin extended by 16.6 to 46%. So that's like huge. And product business up 29%. So for any company, when they are able to get more revenue from the product, then that means it's going to do very well, because that's straight away what's hitting your bank, and you're not doing extra work. It's unlike other things wherein you have to do more to deploy the software. Yes, there is some cost of servicing, there is some cost of implementation, but it still is a significant, every time you sell to a new customer, it's the same product line, not using new raw materials. Similarly, the margins have also improved. So overall guidance from the management is that the revenue growth is projected to be in the range of 18 to 22% for FY25. So they have already come up with that, and profitability is expected to remain healthy with projected net margins above 40%. That's a very good number, I must say. The product business driven by core lending and payment solution is expected to be the primary growth drivers with projections of 20 to 25%. Service business growth is around 15 to 20%. So that's where most of the companies want it to be, that most of the growth comes from the product, because that's your recurring revenue model, especially in the SaaS business. The services business is primarily implementation and passing on the work to customize the software. So they don't want that part to grow that much, because they would expect the partners to take that pie. So that's exactly what this guidance is indicating. So it's a very good guidance from a perspective of the numbers. North America will remain the key market, but the company plans to further diversify its geographic presence to Europe and Asia Pacific, especially Singapore and Australia. So that is the overall weak banking stocks. Mostly the negative thing was on HDFC Bank because of muted results, and the net interest margins are definitely impacting every bank, but others like ICICI Bank and Kotak have been less impacted. OFSS with stupendous result. I do believe that this week again Nifty will remain in consolidation. We'll see how it goes. Slightly above the average piece, the Nifty is trading. Depending upon how the market starts perceiving, the chance of Modi being back, it will move in either direction. But currently it is in the consolidation phase. I'll see you in the next one with the Nifty bulletin. For now, thank you for watching, and you should go and check the links provided to check on BARD and query it further. Bye. See you for now.